Okay, so today was a pretty interesting day. Um, Overnight direction was bearish. I had like a little range outlined on the 15 minutes, a little bit more clear. It's this range right here, and we were kind of just consolidating around that. And then come midnight, we consolidate a little bit, and then 2 a.m. London kill zone, we expand lower, come clear the sell side here. By the time we get to New York, and New York's price action was a little choppy in the beginning. Um, I took about 8 positions around this area trying to sell it for my target, which was around over here. And we ended up going down 2% by the time we took a position around here. And we put a stop loss about 20, 30 pips. And we caught a huge move that ended the day at around 3%. So we took a pretty nice trade. Um, I kind of took way too many positions early on. Um, I didn't have the higher time frames like in mind while I was taking these positions because I kept on trying to sell it and close the position out. Tried to sell it, close the position out, like around here. Like obviously this 1 minute candle, it's pretty sketchy. Like we opened 9:30, and after this candle, I figured I could just sell it, and I got a little bit of nice movement, but then obviously we were heading for that 15-minute candle. So we cleared the buy side. We came and worked down in this range, and so after that, we had a very nice expansion, which was right here. And then at this point, I was waiting for price to move lower, then we wicked really quickly, and I got out pretty much at the bottom of this. So ideally, the position would have been to take it here, put the stop loss like 40 pips or so I can have a 1% risk. That'd be 50 per pip, and then I would have taken profit, which I had the same profit around here, and it hit pretty nice. I was a 5.5% trade right there. Um, but then, interesting enough, we retraced that entire movement, cleared the buy side above this expansion that took place at 9:30, and then once 10 a.m. Well, no, once 11 a.m. hit, we had the change in delivery, in the state of delivery, and we took out the sell side below these lows right over here. And I also took another position. I took like a 0.25% position, and I got out at 0.5%. So I ended the day up pretty well. Um, Today was a good trading day. The only thing I wish I did was wait a little bit longer for price at the 9:30 open, because yeah, that kind of faked me out in the beginning. So we went and cleared out the sell side, and now after we cleared out the sell side, we're coming back into this daily fair value gap, and we are at the 50% level of it. So I want to mark that. I think that's significant. Looking at it on the daily, on Friday, we obviously made a wick lower, already like working into this fair value gap, and then we closed higher. And then Monday, we completely closed it today, which is Monday. And so I don't really see us coming back to fill this wick. I think the 50% level of this fair value gap is a good place to look for entries. Unfortunately, it's not within our time frame, so we will not be trading this, but I am going to just like put the level out so we can see how it reacts. Because if we're bearish, like we already came back and worked through this wick. with this price action. So I don't really think it's likely that we come all the way back unless we're gonna go higher from here. So let's see here. So 3412.2. Okay. So yeah, we tapped into that and looks like we are closing within this order block right here, and we're within this order block over here as well. So let's take a little bit more zoomed out look. I do think that this is the draw on liquidity. We may be reaching this by the end of this week, these equal lows right here. Looking at dollar index, so um, the analysis I made yesterday, we were just around here, and I said there's a possibility that we can bounce off this order block and then move back higher. Um, or, we would just completely uh, move lower because retracing this expansion, it looks bearish. This is a classic signature ICT teaches where you run for a fair value gap and then create a new low. However, we did clear the lows, taking the sell side liquidity, but then obviously we made a retracement higher, and now we supported off that fair value gap. So I think we're going to be working into these levels here this week, and that would align with all the indexes moving lower. Um, you know, I could honestly just take a position like this, 70. Oh, it's a short, right? I'm gonna make it like a 70 pip stop and then come take that out. Could risk like 0.5%, or I could just do 1%. But this thing could still push higher. It could still push within this fair value gap, and yeah. So I'm just gonna wait until tomorrow, and we'll play it from there. But yeah, after this, I'm gonna just journal the trades that I made today and look through it. One thing I learned from rewatching or watching ICT's 2022 membership is where he said that he learned this technique from this one guy where he would the traders that were trading on the floor of the stock exchange would, when they were trading stock indexes or stocks, they would take a position, like just like one lot, just a regular position at the 9:30 market open, just to get a feel for the price movement. Not to really make any money off that trade, but to like just like get a sense of the ebb and flow of the market and how it's reacting off that position. And he said that he did that as well in that particular video. So I do find myself where when I enter a position at 9:30, I like the first position that I take is rarely, not rarely a winner, but like some days I just take one position and I'm done. But like more often than not, I'm taking a position and then, the market kind of chops around like it did right now. Like it started down here, it went up back up, and then like created like a indecisive candle here and then went back lower and then came back up. So like if I were to just enter like let's say a long and I saw that how it was moving, I could be thinking, okay, so it looks like it's moving higher. Let's move on to the 15-minute time frame and see that, oh, okay, so we have this order block here. So this could probably be the drawn liquidity. And so, yeah, taps it. I wonder if this high took it out though. So we got 34 228.4, 34 228. So this would have been a like an interesting run. Um, we probably would have put our stop loss here, but if we put it like directly at this high with the spread, like probably gonna would have gone taken out if we took the position here. But yeah, so that's another thing that I learned, and I might do that tomorrow. I might just put like a one lot, which is just $10 per pip. Like, unless there's like fucking news out, market moves 200 pips, I think I'll be good, and it would give me a good sense of direction. So yeah, that's that. We are so we tapped into this. See, like when the levels align like this, it's very tempting for me to take a position. So with this swing right here, came back up, fair value gap, reprices lower, and creates a fair value gap here. The the candle that creates this fair value gap, the discount low, aligns exactly with the 50% level of that daily fair value gap. And I've seen that when price levels align on multiple time frames, then it's it's pretty significant. And if the order flow is bearish and we have some kind of signature in price like this, then I mean, just like on Monday, we were within this range. We were within this range really. Like we could have taken a trade, like let's say somewhere here or 7. Could have put our stop loss above this high. I got 65 pips. That could have been a 1% stop loss or half a percent even, and then we would have held it for here, 2 to 3%, maybe even 5%, or even taking this out, 7% trade. So yeah, basically there are plenty of opportunities in the market all the time. Doesn't matter what time of the year it is, honestly, because if the market isn't really like giving us a lot of opportunities, then we would just lower our price targets. And instead of looking for like 4-hour lows and highs to be taken out, we can just look for like 15-minute highs in those or hourly highs in those. Um, yeah, anyway, looks good. I'm gonna go journal my trades, do some homework, and then get myself ready for tomorrow. I guess the weekly objective would be, honestly, I do think we're going to tap into this order block. If this is the weekly high, then, I mean, the high of December, November, then I think we're going to be tapping below these levels. I definitely don't think we would be moving any higher than this. Like that 50% weekly wick is, in my opinion, no longer a viable target. Um, Obviously, the economy is not in in a great shape, although I do believe recovery is on the way, probably around next year, mid second half of the next year. So we still have some ways to go. Um, I don't know if we're gonna go run these lows, but I do think we're gonna revisit this expansion right here. So, but price target for this week, it would be the weekly low of the previous week. I think that's a viable place to take targets. Um, like currently we're inside of the range of the previous candle, so that's something to consider. There are not many ranges where we are like that, looking at a weekly. Like it's really rare to be in like create like an inside candle. Like this, okay, this is an inside candle, this is an inside candle, and then so it took 2 weeks for it to do that. to break out of the range of this candle. Um, so yeah. So even this candle took out the buy side of this candle. Even this candle took out the buy side of this candle, and then obviously, so we could do something like this probably, but we'll see. The fact that we're working within this range, like coming back down below it, is pretty. I think is indicative that we're going to be moving lower. I'm also going to take the 50% of the weekly range. You can see we're above that. I do think that's significant as well. So we'll mark that as 33,926 and a half. Okay, and let's just mark these levels right here. Weekly 50%. Wick. We got the 50% of the daily value gap. This is our target. It's the weekly lows. And so yeah, I don't know what that level is. Oh, I think that's the daily low, right? Yeah, so we got daily lows. Looks pretty crazy, right? All this stuff on the chart, but there's a purpose for everything. I like having these outlined just to read the story of price action, because that's the way I look at price action. I look at it as a story, with the premise being, where are the market makers taking price? And that's based off of where I believe liquidity is. Okay, so let's move these a little bit closer. So yeah, if we break down below here, if we break down below the wick, then I'm gonna look for a setup to take that, to take a short, at least to here. If I can find like a 50 pip range or something like this, then I'd be looking to take a short like that. But we would have to close down below this for me to take that position. Honestly, like I could take a position here as well. I'll put it at 60 pips. I'll do something like this. I could definitely do this, but I'm not. I'll wait for tomorrow. And yeah, that's that.